Hello, everyone. Welcome to this overview of the crowdsourced funding equity raising product package that's part of the ESS BIZTOOls advanced package. I'm Peter Towers, Managing Director of ESS BIZTOOls. Welcome. Crowdsourced funding equity raising. It's very important. Got off to a slow start because initially it was only for unlisted public companies, but then the government changed the legislation to make it available for unlisted public companies, but also private companies. So now it can be raised by a private company or an unlisted public company. The terminology crowdsourced funding equity raising should not be confused with donations made to crowdfunding appeals. It's a little unfortunate that the government chose a very similar name for crowdsourced funding equity raising to one that basically already existed in the community's general vocabulary, because there were well-organised organisations who were promoting donation-based crowdfunding appeals, but that's the way it is. The legislation provided for the appointment of individual businesses that held Australian financial services licenses, and those people would be known as crowdsourced funding intermediaries. They were given wide power under the legislation. A company which wishes to raise capital must have at least two directors. A bit different from a normal proprietary company in Australia, which can trade with only one company, one director, as you know. But if they wish to be a crowdsourced funding equity raising company, they have to appoint two directors, one of which must be an Australian resident. They can appoint more directors, of course. And if they're an unlisted public company, they need three directors in any case. Majority of the directors must reside in Australia, and the company's principal place of business must be in Australia. The company and any related party must have consolidated annual revenue of less than 25 million Australian dollars in the preceding 12-month period, 25 million Australian dollars. The value of the consolidated gross assets is also determined at a figure of $25 million. And those assets are worldwide. Now, neither the company nor any related parties can be listed on a stock exchange anywhere in the world. So crowdsourced funding equity raising is deliberately targeted at companies which are not directly or indirectly listed on a stock exchange anywhere in the world. And cannot also be included on the official list of any financial market operated outside of Australia. Neither the company nor any related parties can have a substantial purpose of investing in securities or interest in other entities or managed investment schemes. So what the government wants is that the capital raised is going to be invested in the business for the business's activities. It's going to be creating employment and hopefully creating wealth for the investors. The maximum amount that a company can raise in a 12-month period, and this is total amounts raised under any section of this Corporations Act, which would primarily be Section 708, and as crowdsourced funding, the aggregate must not exceed $5 million. But that's the amount that can be raised in every 12-month period, as long as the company is approved by a crowdsourced funding intermediary, and obviously as long as the market agrees with the company's vision and invests in the company, $5 million every year. The company must prepare a crowdsource funding offer document in accordance with the legislation, and this has to be submitted for review to the crowdsource funding intermediary. Now, before that, it's going to be important that the company has prepared its own business plan and has a clear vision that it can articulate. This is what we are going to achieve. And it will also need its predictive accounting reports, budgets, cash flow forecasts, projected balance sheets, and the key indicators, looking at the key sub-accounts, debtors, creditors, inventory, capital expenditure, research and development activities. All of these activities can tie up a lot of money, so they need to be separately analysed, not just hidden in a budget cash flow forecast, because it's important that the key metrics are determined. What is the debtors' days outstanding that's been budgeted for? If the business is showing that that's going to be 30 days, I think you'd be shaking your head and saying that's probably not possible. Australia's got the highest debtors' days outstanding in the world. And if a company's done its projections on achieving a 30-day rate, it's probably not going to be true, and the company could run out of money. The offer document must have prominently displayed on the platform the crowdsource funding risk warning. So within any documentation prepared as part of a crowdsource funding equity raising, the risk warning that is defined in the legislation must be included, word for word, no variation. It's tough, it's hard, but that's the government's insistence that this must be included so as to offer a warning to potential investors that there's no guarantees that all of this is going to work. The company directors appoint the crowdsource funding intermediary. Originally, there were 16, or during the first couple of years, there'd been 16 appointments. It's a bit difficult to track what the current situation is, because some intermediaries appeared to have reduced their activities in crowdsource funding activities. I suspect this is because they haven't been getting enough deal flow. So you can suggest to your clients that they talk to the active intermediaries. They're led by Birchall, who's based in Melbourne, and Equitise in Sydney. There are others, and you have a list of those in your documents that you have as part of the ESS BIZTOOLS subscription. The directors should be confident that they can work with the intermediaries, because the intermediaries will play a very important role. They're just not there to judge the crowdsource funding offer document and decide whether the company has met the legal guidelines to be admitted as a crowdsource funding equity raising company. They are also promoters. They will help market and raise the capital. That's their role, to be the representative of the Australian Security Investment Commission, but also to be the marketer to help the company that they have approved raise the money. The directors can only appoint one crowdsource funding intermediary at a time, because the appointment of the intermediary is linked with the intermediary then approving the crowdsource funding offer document and setting the whole thing up. The documentation, the legal document, refers to the platform, and the platform is the intermediary's website, which is where the details about the company will be displayed, and that is where any potential investor has to go. If the investor has questions, they can go onto the intermediary's website, pull up a particular company's information, because they might have 20 or 30 capital raising activities working concurrently. You pick out the key one. And if you want to leave messages for the directors or ask questions, a member of the public can do so. And the intermediary will be contacting the directors and leadership team members to make sure those questions are answered. So when the directors have resolved to appoint an intermediary, they're going to then sign off on a funding agreement. The agreement will indicate the fee to be paid to the intermediary or the shares to be allocated to the intermediary when the capital has been raised. That's the decision of the company directors and the intermediary in discussions. Now, most intermediaries wish to be paid in cash. Some do take shares, but it's a minority. So I've already told you that ASIC is the government entity that supervises all aspects of crowdsource funding, equity raising. They appointed the intermediaries. They can discipline the intermediaries if they are so inclined. And they receive reports from the intermediaries on every aspect of this program. They receive information on the successful companies and the unsuccessful companies in the capital raising process. And they ultimately report through to the responsible minister, who is the treasurer of the government. So the intermediaries act as the gatekeeper. This was the terminology that the then treasurer utilised when he introduced the legislation to Parliament, because of this dual role that they have. The intermediaries have got thousands of people listed on their databases as being potential investors. People have shown some interest in receiving details. So the intermediaries communicate with their prospects and give them information about the latest company that they have on their books that they're raising capital for. Whilst there's a prohibition under Section 708 of a company advertising for investors, once the company is approved by the crowdsource funding intermediary as being a crowdsource funding intermediary, a crowdsource funding company, the intermediary can authorise advertising and marketing promotion by the company and also by the intermediary themselves. You can't appeal to ASIC on a decision that's been made by the intermediary. The intermediary has got a lot of power, and the government deliberately did this. They didn't want all of the communications being tied up within a government department like Australian Security Investment Commissions. They wanted the real world of commerce to determine a lot of these issues. And for that reason, the intermediary that's been appointed by the company directors is the only adjudicator to determine whether a company has complied with all of the legislation. That includes the crowdsource funding offer document that the company prepares and submits to the intermediary, and the other documentation that has to be uploaded that the intermediary will identify. And the intermediary can suspend the capital raising process at any time if they find that some of the information is incorrect or that they have other reasons to be concerned about certain aspects of the capital raising process that the company has undertaken. This is not a process to raise loan funds or any other type of activity. It is only for the issue of ordinary shares in the company. So as you know, under the Corporations Act, the company is that is a private company is listed to 50 shareholders. That still applies to the normal shareholder category. A company can also have employee shareholders on its register, and a separate register is then maintained on the crowdsource funding equity raising shareholders as they come in. So the fact that a company might end up with 1,000 crowdsource funding equity raising shareholders will not prejudice the company being a private company, as long as the non-employee shareholders and non-crowdsource funding equity raising shareholders do not exceed 50 shareholders. The capital raising process has to be completed within 90 days, and it cannot be extended. The intermediary's got no power to extend it beyond 90 days. The company, however, can shorten the period by nominating 30 days, 60 days. And the company can also nominate a minimum subscription and a maximum subscription, or only one subscription amount that they're trying to seek. So if the company directors have nominated that they're trying to raise $500,000, if that's raised within 2 days, they've raised $500,000, they cannot then turn around and say to the intermediary, oh, well, let's keep on going and raise $1 million. It's too late for that process. That should have been thought about in the planning process, so that the company nominated a minimum subscription and a maximum subscription. If the company had done that, it could have rolled that on as the capital was raised. They raised the first $500,000. They could have then continued through to the $1 million in capital raising. And this is why we recommend that as part of this process, you spend 4 hours, maybe even 8 hours in communication in a training program with your clients to make sure that the directors and the leadership team have a full understanding of how this whole process works. Because they don't want to be embarrassed in finding that some of the issues that they might be concerned about are in fact covered in the legislation. The legislation is very specific that the intermediary has to operate what is called a communication facility. Now, that communication facility in actual practice is a website whereby the company's details in video or other format are available. So this will include the crowdsource funding offer document, the financial projections, the statements as to what the position is before the capital raising and what it will be post the capital raising, details on the company's vision and its activities, details on the company's leadership team members and directors. All of that has to be there. So this will enable the public to access that information and make comments, ask questions, find out more information before they make their investment. The company directors and the leadership team members have to be readily available to respond to questions raised by members of the public about the company on the intermediary's communication facility. This is important. This legislation was in a brand new space for Australia, and indeed the other countries around the world that we followed after they'd had it for about 6 years. Companies in this space, traditional private companies, had never been able to raise funds direct from the public before in a methodology that allowed marketing and advertising to be implemented once the company was deemed to be a crowdsource funding equity raising company by an intermediary. So the concept is that every question that comes to the intermediaries communication facility should be answered within 24 hours. That's what the intermediaries try to ensure occurs, because that way it keeps the market informed. And a very important point to remember in this is that every communication is recorded. So you can go on now and just search through on a company that's on an intermediary's website and review what the questions were and what the answers were. And you can make up your own mind then as to whether you think this is a good investment. Now, this is far more disclosure than what you will get even in a initial public offer on the ASX. So there's a lot of great points about crowdsourced funding equity raising and the amount of information that's been made available. One of the other reasons for this is that the government anticipated a significant number of the investors would be, quote, mum and dad retail investors, not sophisticated investors. And they have supported this market. In fact, various estimates indicate that around 70% of the investors in crowdsourced funding equity raising, and there's been over $380 million raised since it started in Australia, were made by retail investors. The intermediaries are not there to finance people to buy shares in any of the companies. In fact, it is expressly forbidden. They cannot do that in any way at all. For retail investors, there's a 5 business day cooling off period. They can change their mind. They can ask for their money back. So when the investor wishes to invest, they complete a share application form and they supply information that their capital sum can be transferred to the intermediary's nominated bank account, which is where it remains until the minimum subscription has been raised. But if the investor is a retail investor and they change their mind, they've got 5 business days in which to request a refund of their subscription, and the intermediary will pay it back to them from the special account that they have created for holding this company's capital contributions. It's very important that retail investors, so these are people with assets less than $2.5 million or have not earned over $250,000 in the last 2 financial years. It's very important that these people are appropriately warned of the risks of investing in these type of companies, according to the government. So this is part of the obligation that the company directors have accepted when they apply to be accepted by a crowdsourced funding intermediary as a crowdsourced funding equity raising company. Some of them might not like the wording in the risk warning. I've had some people say, oh, we can't have that there, we don't want that, and give me an alternative wording. That's not the law. The law says this particular statement has to be included in the documents and on the website and anywhere else that information's been made available. So even if your client's company has developed their own website, which they can with the intermediary's approval, that's referring to the capital raising once they've been accepted by the intermediary, of course, they can have details of the capital raising process. Some of that information will be prepared by the intermediary, but the risk warning must also be included in that promotional material. And also there needs to be a clear indication that anyone wishing to invest must complete the share application and lodge it on the intermediary's website and make arrangements to transfer the funds that they've agreed to pay to the bank account nominated by the intermediary. So a company director can't go and see his favourite aunt who wants to give him a $1,000 check or even in cash and say, well, I'll buy some shares and help you out. That all has to be transacted via the intermediary's website. It cannot be done on the basis that the director says to his aunt, well, I'll take all that paperwork and lodge it for you. That's contrary to the law also. The intermediary has to be satisfied that that lady, the aunt, has cited the investment warning, which is very prominent on the intermediary's website when someone is finalising their share application, and that she has acknowledged that she's received the risk warning. And that's why they cannot invest in crowdsourced funding equity raising via a third party. They have to be transacting the transaction themselves. I've already said this, but I'm going to repeat it because directors and leadership team members really need to understand these rules and regulations. And they are different to anything else in the Corporations Act. But it's essential if the company is going to be trying to raise capital in this way, that you don't want embarrassment and confusion arising during this process. And I think it's very important. And in fact, the ESS BIZTOOLS package has been prepared on the basis that the accountant advising the client will fully brief them in a workshop environment before there's any contact made with a crowdsourced funding intermediary. It's very important that your client comes across as understanding how this legislation works, because the intermediaries are receiving a lot of applications, especially as there are only 3 or 4 intermediaries actively involved. And I'm going to come back to that in a moment. So if someone is being hard to get along with, they're probably not going to persevere with the discussions. They will cut them off and say they're too busy or they've got enough clients or whatever. So that's why the directors need a clear understanding of the rules. And this brings us now to some comments on the intermediaries. One of the intermediaries, Equitise, produces a very interesting annual report each year, which we have affixed to the information within our website on crowdsourced funding equity raising. And that report indicated that Equitise had only seriously considered about 5% of the applications that they had received. They only seriously considered 5%. Unfortunately, they did not publish in that report why they rejected that 95%. But I've had some discussions with key executives within Equitise and also Virtual, the other major performing intermediary. And the answers that I've gleaned is that the people who talked to them just did not understand how crowdsourced funding equity raising operated. They hadn't prepared a business plan or projected financial reports, budgets, cash flows, projected balance sheets. They hadn't clarified what their vision was. They didn't have a website, and therefore they had not been doing any general promotion on their company's activities, which creates some sort of atmosphere in which the company might have been able to work with an intermediary to raise capital. And the disturbing follow on from the 5% was Equitise indicated that only about 72% of those actually raised capital. So if you compute those figures, it's about 3.6% of the companies, businesses that applied to Equitise actually raised capital. Now, I think the challenge for accountants is to make sure that a significantly higher percentage than 5% are evaluated properly by the intermediaries and hopefully do get a Guernsey to play in this game. That means that we as a profession have to be far more proactive in talking about crowdsourced funding equity raising, in promoting it to our clients. Turnovers under $25 million, gross assets under $25 million, can literally raise $5 million in a year from shareholders. Yeah, there's a whole process, and obviously your clients have got to be content with having shareholders, and they have to abide by corporate governance. They will have more directors on their boards. There's a significant amount of accountability. But it's how companies grow. It's the start of scaling up. I don't think we should be scared of it. We should be promoting it. We should be talking about it. And it creates a lot of work for accountancy firms or the other key advisors, business plans, predictive accounting reports, understanding how the legislation works. And at the end of this process, I think there's potential for being appointed the virtual chief financial officer of that company. Not many of them will have enough money that they're going to employ a full-time CFO, but they need prompt, accurate financial accounts throughout the years for their directors. And for some of the others there in your firm, there could be potential audit appointments, because if the company raises more than $3 million from any activity, they need to appoint an auditor under the legislation, but they can appoint an auditor if they've only raised $500,000. And I think they should appoint an auditor, because the local junior football club has an auditor appointed. The local tennis clubs have auditors appointed. Someone's going to the public asking for cash to be invested in their business. I think they should be appointing an auditor. So let's come back to this horrific 95% rejection rate. That was the figures disguised by Equitise. Birchall, who is the leading crowdsourced funding intermediary at this stage based on deal flow, had indicated that they had very similar types of results. I think there's a need for a major improvement. There are 16 intermediaries appointed. I'd like to see the accounting industry in Australia really get behind crowdsourced funding equity raising, so that those 16 intermediaries firms are all very busy on raising capital for companies that have satisfied the requirements to be deemed to be a crowdsourced funding equity raising company. Then we'd have some real action. And if that led to the government having to increase the number of intermediaries beyond 16, that would be fantastic, because it would show that Australian SMEs were aware of crowdsourced funding equity raising and were using it to help scale up their business operations. And there'd be a lot of work for accountants and advisors in this advisory area. So within the ESS BIZTOOLS advanced product package, there are full details on all aspects of this process to assist your clients to raise capital. There's also material you can use on your website and in your promotions, so that you can communicate to the public, to let them know that you can offer these services to them. I think it's a great opportunity to help your clients that need to raise capital, or prospects, because unfortunately there's a lot of firms not interested in these types of things, even though this is deliberately targeted at a broad cross-section of SMEs, turnovers under $25 million. Gives a lot of prospect companies in that space. There should be a lot more than what is currently applying for this capital. So if you want more information on any of this, obviously, please contact me. Send me an email, peter@essbiztools.com.au, or telephone 07 4724 1118. We will go from there. So please read the material on crowdsourced funding equity raising. within the package that you have if you're a subscriber. If you happen to not be a subscriber to ESS BizTools, you can know all about crowdsource funding, equity raising, and a whole range of other issues, which will enable you to deliver real advisory services to your SME clients by becoming a subscriber. And we would welcome your inquiry. So thank you very much, everyone. If you've got any direct questions you want to put to me about any matter that I've discussed in this webinar, please send me an email, peter@essbiztools.com.au. Have a great day. Goodbye. And I look forward to hearing from you if you've got any questions or follow-up. Thank you.